Hey traders, Raghee here. Let's get a quick audio and video check-in. We should be good to go. Welcome to our Monday, November 6 pre-market show. All right, everything should be good. All right, excellent. Good to see you all. So the show starts at 9. So in case there's any confusion. Again, right? This is good news, obviously to the markets and to people in general. The idea, though, is that what we have right now is probably going to run a very similar route in terms of what we saw with the initial first half of the day rally. You can already see the S&Ps moving up higher. I get a lot of questions regarding, can I still be bullish at these heights? Gang, I can be bullish, of course. Doesn't mean that I want to be buying up here, right? There's a distinct difference between waiting for even a shallow correction to an exponential moving average and buying at brand new highs at 30,000, which is just unbelievable, unreal when I look at these markets. So yes, make sure you start differentiating. And this is probably one of the more popular questions that I get. Rag, are you bullish up here? Well, yeah, the directional bias is bullish, but are you bullish up here is not the same as are you willing to be a buyer up here? I'm not going to buy at the highs. Yeah, that's not going to happen. But we can also switch to in fact, on the open here today, gang, I'll be looking for a quick setup for a gap fade. So one of the first questions we like to answer in the morning. So I flip to my notes for the day. One of the first questions that I have to answer in my notebook, and I do have plenty of them. Always be writing down your ideas. So today, in terms of gap psychology, we definitely have it. Now, what's gap psychology? It's a dual confirmation approach that looks at the 4 p.m. close. This would be on Friday. And then today's 9:30 open in relation to each other. Is it above or is it below? But then here's the second criteria. We look at the regular trading hour high because this is a gap up. And is it above? Is the 9:30 opening above that regular trading hour high? The regular trading hour high criteria is just as important as the opening above the 4 p.m. close on Friday. So certainly we have both those criteria met just a little bit. It's a significant gap. So as a day trader, let's parse our time frames. As a day trader, I'm thinking about focusing on the intraday gap as a potential fade. I don't play the gap right on the open. We look for a specific pattern. And then I'll fade that potential breakdown. The second thing about gaps, gang, is do not look for the close. If you can get a retracement, so for those of you that are comfortable with Fibonacci retracements, look at the gap itself and look at the hole, literally the space between the 4 o'clock close on Friday and the 9:30 a.m. open today. And that hole, that space, that gap, pull a Fibo of it. I'm looking for maybe 38%, 38.2 to 50%. I'm never looking for a gap close. They happen, but that's not the high probability play. And I think a lot of folks end up with some very nice gap fades in the morning on a short-term 1 or 2 or 5-minute time frame, and they overstay their welcome, and they're never able to take a profit because they're fearing that window of the gap is going to close. And it typically doesn't. That's a low probability expectation for a target. All right, so let's talk about a few other markets, and I'll keep my eyes on the chat. Good morning. So yeah, Bill, thank you for mentioning that on the right on the onset there. As far as a vaccine goes, look, there's no bad news in this market right now. What do I mean by that? Is there any bad news that we think that we can't get a boost by way of stimulus, that we can't get a boost by way of the Federal Reserve? Remember, Federal Reserve wants Congress to pass the stimulus package because remember, for them to continue to buy bonds, they need to be created And there's a very symbiotic relationship that's going to go on between what needs to happen from Congress and what the Federal Reserve will continue to do. All that is very good for stonks. Okay, so this is just more good news on top of a market that's going to perceive even bad news as good news. Because remember, when we get bad news, the market's going to perceive that as the market putting the screws, that news putting the screws to Congress, putting the screws to the FOMC to keep the stimulus and the low rates and the, gosh, gang, this year we saw something, and I don't want to go down this rabbit hole, but we saw something this year that is unprecedented. The Federal Reserve, by way of the Treasury, bought stocks. Yeah, they'll talk about ETFs and they'll give all the garbage reasons as to why they bought high yield corporate. They bought stocks. All right. They bought ETFs. They supported the stock market about as directly as they could. Some Fed watchers, far better experts than I, will say what they did on other circumstances would have been reviewed and probably deemed as not within their purview to do. So we've seen some unprecedented things that have occurred throughout the year to put us where we are in the market. So to me, the vaccine is just, COVID numbers dropping, vaccine, employment numbers, GDP. If it's good, it's great. If it's bad, it's still good. So that's the brush with which I will paint all the news right now. That's the rabbit hole that we've gone down. All right, so let's take a look at a few other markets, sort of broadly speaking, and also let's take a look at the economic calendar. Again, I don't think we're going to see a lot of economic calendar effect today. We've got a much larger news bit that's going to eclipse everything else, but we do have ECB President Lagarde. She spoke about an hour ago. Empire State Manufacturing Index, that is going to be the lesser of who cares, because again, we have such a large narrative that's going to eclipse those. We have FOMC member Clarida. I would rank Clarida in terms of impact on the market just after Powell and William. So that's a major event. 2 p.m. It's going to affect the second half of the day. Now, last week, we had a Powell event where I said, look, typically we don't want to be short in front of Powell the session before, or certainly the hours leading up into. So if Powell's speaking at 2, I'm not looking for shorts until after 2. And I think he spoke at 11:45 last week. So am I going to do the same thing for Clarida? Probably not. I don't think it's as big a market influence as seeing Powell on the calendar. But generally speaking, Clarida, Williams, Powell, those are names that you should definitely respect in terms of who the market's going to listen to. All right. One of the things that my futures traders know that I've been a fan of is in this environment looking for short dollar. I see that RBA event later on. For those of you that follow me with, say, EWA country ETF, the FXA Australian dollar ETF, or even the 6A futures, I might have some setups on that later on, but we'll see how that goes. That's the monetary policy meeting minutes. One of the reasons, by the way, currencies have been a little tricky is that certain currencies, especially like the Australian dollar, have not been moving higher with the strength we've seen in the equity markets, which is a little unusual because Aussie yen specifically is one of those markets where we see strong equity markets lead to weak yen, strong Australian dollar, and you see a nice slope higher in the Aussie yen pair. We haven't seen that really quite at all. So that's the calendar. Again, Clarida is not going to be the same type of situation that Powell was last week. So let's see. Brad says, today is my first day as a full-time professional trader. Wow, Brad, fantastic. It's funny, Brad, when you burn the ships, right? This is what I'm going to do. It's a cool feeling. When you just kind of go all in, you can just shove all the chips in the middle of the table. Now, very cool. Congratulations. The funny thing is, I don't consider myself full-time or professional, but I know what you mean. Please don't. And Brad, I'm going to tell you advice that I wish someone had given me when I finally went all in on my trading career. And again, congratulations. And you might already know this. But don't feel the need to put in full-time hours. I think full-time for me, if someone says, Raghee, are you a full-time trader? I'll say I'm not a full-time hours trader. I'm not an employee, right? I'm not in the time economy anymore. I'm in a results economy now. Results don't care about punching in at 8 and punching out at 5:30. Um, Results only care, well, about results. So one of the things I'll tell you that I wish I knew when I went full time was don't feel like you need to be here full time. You don't have a full time job. Full time to me denotes that my income, what's going to pay for the lights and the phone and the car and the whatever, is coming from my trading activities. When people say, "Are you a full time trader?" That's how I define it. But congratulations. And, I see exactly where you're at. Brad, I wish I was half that smart when I started, and kudos. I wish I knew that then. And I'm so glad. Limit the hours. I think you'll notice that it's gonna serve you very well. And speaking of limiting hours, so yes, as you mentioned, 2 hours a day, 30 minutes to prepare. I might prepare more than that, depends. But about 30 minutes, 2 hours. And then in the second half of the day, I'll start looking at longer term setups. And I think Pablo asked me a question. And congratulations again, Brad. That is awesome. That is awesome. Pablo asked me a question about, where is it? I know it's here somewhere. Good morning, gang. So good to see you. Thank you. Yes, good morning. Someone asked me a question about Apple, and I thought I saw McDonald's and something else. Oh, there it is. CRM, McDonald's. I'm not in silver, Pablo, but I'm happy to look at CRM, McDonald's, and the other question was for Apple. Sure. I'm happy to look at that. And I want to take a look at gold and bonds as well. So let's jump on over to gold here. We continue to be bullish on gold. It's taken its sweet time getting out of the range. 1880 is still a level I'm looking for the threshold to see higher highs on. So again, I expect gold value to go up, right? Not straight up from here, but this is a floor that I believe we could bounce off of. I also am expecting bonds to go up because I'm expecting bond yields to go down. Now, with the news, yeah, I'm not surprised that we might see a little bit of fatigue here, but that's actually not that bad. I mean, we had a nice move higher, and I expect that bonds are going to continue to move higher because I expect yields to go lower. That in turn is going to help gold move higher. Remember, gold is a play on real yields and not fear or whatever nonsense that's been tacked to it through the decades. To play on real yields. And bonds, of course, are part of that real yield calculation. So if you're looking for why bonds and gold have that synergistic relationship, it's because of the real yield connection. All right, so then CRM. Sure, CRM is an important stock now because of its weighting within the Dow. It's a heavily weighted stock within the Dow. Let me show you here. Okay. Number 3 weighted name in the Dow Industrial Average, CRM. But let me tackle the CRM question the way that I do it in the futures room and the way that I do it in my mastery, my Sector Secrets Mastery, when I'm building a watch list. In fact, those of you that are part of the Sector Secrets Mastery, and unfortunately, when I do these broadcasts as opposed to when I'm in the chat room, I can see who's in attendance. But if you're part of the ETF Masterclass, if you're part of the Sector Secrets, yesterday, I mentioned I love to do my homework while I'm watching football. So you got that watch list from me, my Sector Secrets folks. You're going to get my radar this morning, which are some of the setups that I'm looking to see trigger. But the watch list is the most important part of that, which is to say, what do I want to trade? What don't I want to trade? And when I look at the Dow, CRM is just not near the top of it. Is it buyable? Yes. I sure don't want to short it. Let me open this up here. I sure don't want to short it. Why? Respect the trend that was, right? Respect the trend that was. In other words, how do we get to the current chop that we're in? The other thing that I do not like is a proximity to earnings. A lot of people like a proximity to earnings. I am not one of them. I do not want to enter into a highly volatile event with an open position. I think that much like Powell, we know there's certain behavior that's highly probable before an event. And we know that there's volatility highly probable during the event. And then there's the aftermath of the event. I like pre, And I like aftermath. I like the run up, as they say, into earnings, and I like to take advantage of the post earnings environment, but I'm not ever interested in holding through earnings. Nothing wrong with it. It's just not my cup of tea in terms of risk and the kind of volatility that I like to sit through. I think before we even, and that's part of why I don't like CRM, the earnings proximity. The other part I don't like it's a yellow wave. So I like it for an oversold buy, but I do not like it for sort of the best market that you're ever going to trade as a trader. The reason we all love uptrends, even better than downtrends. Trends are great. They're the best, but uptrends are better than downtrends. There's a lot more volatility in downtrends. Uptrends are great because they just are much more predictable. The probability of a dip yielding another move to the upside, at least to where the dip started from, is much more likely. So what I'll do is I'll focus on those particular market behaviors, intraday, end of day, that are exhibiting trending, uptrending behavior. And anything that's double green on this layout is an uptrend. UNH, Honeywell, Caterpillar. That's my watch list. Now, can you add things like Microsoft and Amgen and Visa? I'd say Visa would be one to look at. I'd say after that, I like CRM. So you want things that are exhibiting as close to an uptrending. And actually, I'd probably say CRM would be right after Caterpillar, United Health, and Honeywell. I'd say I'd look at CRM after that. McDonald's, I would be very cautious about. McDonald's is going to be an oversold buy scenario. We've got earnings out of the way, which is amazing. So now I'm looking for this area here to hold as support, and I'm willing to be a buyer on oversold buy. So this is an oversold buy situation. Now, if I'm going to look for something like that, if I'm going to look for something like an oversold buy there, just to give you guys a little bit of a path, not December 18. It's only 32 days to expiration. I'm going to go out to January, plenty of open interest there. And I'll look at the 210 calls. I'll look at those Jan 15 210 calls for McDonald's. Last was Apple. Again, gang, remember, we do have gap psychology. Each index has to be checked for that because the bell's going to ring here in about 12 minutes. So we do have gap psychology in play. Apple's choppy, and Apple's, unlike McDonald's that was down near its range, Apple is not anywhere near that. It's in no man's land. So while Apple is potentially going to be an oversold buy scenario, I don't have any proximity to that setup. So I won't do anything on Apple. So again, that doesn't mean that there's not a 1 minute opportunity to be had. It just means that I'm not interested in the daily. So 1 minute, completely different conversation, right? If the markets are going to go higher, clearly Apple's very likely going to be a part of that because Microsoft and Apple are quite unique within the top three indices, NASDAQ, S&P, Dow. They've got weight in all three. You're not going to see many stocks significant like Microsoft and Apple because they don't have exposure across all three of the broader averages. Microsoft and Apple are unique in that regard. Top 10, heavily weighted, all three broader averages, which, by the way, makes XLK, the ETF that they are heavily weighted within, makes XLK a very important ETF to watch. All right. Okay, let's see. Other questions we have here. The HPMRs, Beverly, they are in the room drive. So you're in the futures room. Yeah, last night I updated the room drive. So just open up the room drive. I'll be in the futures room in just a minute. So just go into the room drive and you'll see the 5 different think scripts as well as the instructions. So check out the room drive. All right. Real yields. Where do you find real yields? There's a site called Quandl that does a really good job showing you real yields. And I use this, the Treasury real yield curve rate from Quandl. It's just an easy place to look at this. And this is going to have an inverse relationship to gold. So as this is chopping, guess what? So is gold, right? You can look at that and say, wait a minute, that looks a lot like what's happening in gold. So this is heading lower. It's taking a break, just like gold was heading higher, and it's taking a break. Inverse or negative correlation. Okay. Financials. I haven't been doing a lot in financials. I'm more than happy to take a look at it. It's not been something that I've really liked a lot. However, JP Morgan, also heavily weighted within the S&P, has some good structure. Financials itself, I would not play broadly, but what I have been playing specifically, because they've been the most reliable the last few, well, I'll show you here. Blackrock, BLK, has been one I've been long. So instead of playing the broader average XLF, Blackrock, I've been looking at Blackrock, and see there, Morgan Stanley, had my eye on Morgan Stanley. And then you can also add Schwab to this. I would like to get long financials, but for now I'm just choosing the relative outperformers. Schwab has been a fantastic relative outperformer to the financials. So a lot of times when a broader average is choppy, as financials have been, I'll start honing in on those individual names that start to exhibit bullish structure and organization before I'll go broad. So I'll go very specific before I go broad as the market's trying to reorganize. So I've been playing those three right now. Remember, rotation is always a momentum game. So, all right, gang, I got to go. It's time for me to get over into the futures room. So I will see you all tomorrow. All right. In the meanwhile, so no, I'm not going to play XLF broadly. No, I'll play those individual double green stocks. I'm not ready for XLF yet. And just one last question before we go. What time frames do I use? Ralph, over 32 years, I have gone from looking at as many as about 8 different time frames to as few as 3 different time frames. And now I'm down to 2 time frames. I day trade the 1-minute charts in the morning from 9:30 to 11:30. We were talking about that earlier with Brad. And I look at the end of day time frames to trend follow or swing trade or overbought, oversold trade in the afternoon. And so it's 1 minute in the morning, daily time frames in the afternoon. Life is easy. I'm not time frame chasing. How many times have you been in a stock where you chose the 30-minute to enter, but it should have been the 60? Or you played the 5-minute, but it should have been the 15. I didn't want to, I was tired of that nonsense. I thought to myself, I'm going to be day trading or I'm going to play end of day time frames. And that, after 3 decades, is exactly where I'm at. I knew I'd get here eventually, but this is where I'm at. 2 time frames, no more time frame. I don't use multiple time frame confirmation, no more multiple time frame scanning. I'm day trading or I'm end of day trading. It's been really much better. And I've been doing that for about, I don't know, my members might remember better than I do, probably 3-4 years now. Okay. All right, gang, have a great one. I'll see you tomorrow. Be good to each other.